Welcome to the Travelex Weekly Outlook. It's the week of April 18th and the dollar is actually off to a fast start. We have seen the dollar rebound from some of the lows it touched the week before. Last week the dollar actually fell to a 16-month low against a currency basket. It also hit a 15-month low against the euro, but the dollar is actually in positive territory. It's near a 2-week high against the single currency. Right now we're seeing markets fairly thin, and this is on the approach to the long Easter weekend, so a lot of traders have stepped to the sidelines, and that has caused for some erratic trading. Nonetheless, we have seen new concerns about Europe's sovereign debt crisis. There's concern that Greece might have to restructure its debt, so that is really putting a spotlight back on Europe's sovereign debt crisis. At the same time, there was an election over in Finland over the weekend, and that showed that a lot of Eurosceptics they basically added more seats in Parliament, and so that does present the risk that perhaps Finland could threaten or could delay an expected bailout of Portugal. Portugal just a few weeks ago became the region's third nation to request an emergency bailout. So that again has put a spotlight back on Europe's sovereign debt crisis, and that's put general pressure on the single currency this morning. Excuse me. The dollar actually so far has taken in stride news that S&P has downgraded the outlook on long-term U.S. debt. Nonetheless, that could be a source of dollar weakness in the coming days as concerns about the U.S. fiscal position. That is one of those key liabilities for the U.S. currency, along with the Fed's low rate outlook. So that does run the risk of putting some downward pressure on the U.S. currency. Right now, actually, to start the week on Monday, we have seen the dollar fall to fresh lows for the week against the Japanese yen. That's a safe harbor currency that's attracting a lot of flows given the market's more risk-averse tone, given concerns about Europe's debt crisis, as well as the fiscal picture here in the U.S. Last week, though, we did see the dollar turn in a fairly decent week. It did rebound from some of those midweek lows against the euro and also against a currency basket, and that had come as investor appetite for risky assets had slowed given concerns about Japan's nuclear crisis. Officials there in Japan last week, they actually raised the severity rating of their debt crisis, or of their nuclear crisis, all the way up to 7. That's on par now with the 1986 Chernobyl accident. So that really dried up investor appetite for some of those risky assets, risky high-flying assets like the euro, the pound, and even the Australian and Canadian dollars. And so that did work in the dollar's favor. Some of the other currencies that benefited as well as the dollar last week were the Japanese yen and the Swiss franc, other traditional ports of shelter. The coming week, as I mentioned, that's going to be a holiday abbreviated one, given Good Friday and the Easter weekend that's ahead of us. So if you see any type of choppy conditions throughout the week, decreased market volatility is likely the result of that, given that a lot of investors are likely going to increasingly head to the sidelines. Nonetheless, investors will really look at the U.S. housing market. That comes under the spotlight this week. We have a series of reports on home builder sentiment as well as existing home sales. So investors will take a look at that and see if the housing market is making any more progress towards a recovery. That has been one of the down spots for the U.S. economy. That is one that's really holding back the strength of the broader economic recovery in the U.S. Some of the other reports on the U.S. economy this week are going to include the index of leading indicators as a forward-looking gauge of the economy's prospects in the coming quarters, as well as the Philly Fed index of manufacturing activity. And then another focal point for market watchers this week will be on the UK. This week on Wednesday, the Bank of England is due to release the minutes of its latest policy meeting, and that could shed important light on the timing of any type of inflation-fighting rate hike by the Bank of England. So that'll be something to watch. But nonetheless, that's going to do it for this edition. Thanks a lot for checking us out.